Hi, everybody. Good afternoon. Welcome to today's Capita webinar, coming to you live on July 18th. We are joining together for day 4 of the 5-day interactive series on NAHASDA Essentials, presented by Cheryl A. Cosley. My name is Brooke Warrington. I'm the Training and Development Specialist here at the Native Learning Center. All of us are so thrilled that you could be here for today's webinar. If you could follow along as I read the disclaimer aloud, this webinar provides a summary of fundamental concepts, requirements, and/or procedures within the allotted 90 minutes. The material discussed does not illustrate all possible scenarios that could be applicable. We also have our copyright infringement law printed here, so just know that the presentation materials are protected by copyright, trademark, trade secret, and other intellectual property laws. Okay, before we get started, I want to make sure you know how to interact here on the Adobe environment. So know that if you go up to the top of your screen, you will see a hand with a plus sign. If you click on that icon, you can either raise your hand, agree, disagree, show applause, show laughter, or even signal requests like asking the instructor to speak louder or to slow down. Your screen should look similar to this graphic here. All the way to the bottom left, you will see a pod that says Files. Here you'll find both a copy of today's presentation slides, as well as a comprehensive list of reference materials that Cheryl's prepared for you. So that second item is a list of all the reference materials that are there, and then all 31 reference materials are below that. So it'll go down to number 35. In order for you to download these onto your device, just hover over the item that you want and click that down arrow. That will download it onto your device, and it should save into your device's download section. Next box over to the right is the web links pod. So here you'll find a link to today's webinar feedback survey. You can subscribe to the NLC emailing list and receive our weekly newsletter. You could connect with us on LinkedIn. If you would prefer to use the Adobe Connect app, we have the download link available. And then most importantly right now, I have included the links to the recordings of day 1, day 2, and day 3 of this training series. So if you missed out on any of the above, or perhaps you have a colleague that you think would benefit from this training, feel free to share those links with them. And they are also in the chat box for you. Speaking of which, all the way to the right, we have that chat pod available. This is how you'll communicate with both the instructor as well as the NLC staff. Most questions that y'all will have, Cheryl will answer through the course of her presentation. But if you want to send it into the chat just to kind of have it there for the end, that works too. Feel free to send in any comments. And if you're having any kind of tech support issues, go ahead and send that into the chat as well, and I will do my best to help you navigate. I want to give you a heads up that most tech issues can be solved by just exiting and then re-entering the meeting room. Let's go ahead and get the chat box going now. If you want to introduce yourself, you could let us know your name, where you're joining us from, your tribal affiliation, and your work or your role in Indian country. And with that, y'all, it is with great pleasure that I introduce your webinar instructor, Cheryl A. Cosley, and we're here for NAHASDA Essentials Day 4.
Thank you very much, Brooke. Welcome back, guys. Glad you made it to the 4th day. Welcome and good morning, good afternoon, depending on where you're at. I don't think we have any good evening in the room. So this is brought to you, as she said, courtesy of the Native Learning Center. My name is Cheryl Cosley. My Anishinaabe name is Redbird Woman. I am Loon Clan, and I come from the Bay Mills Indian Reservation in the Upper Peninsula of Michigan. I served 28 years with my tribe as their director of housing, and I served overall 16 years as the chairperson on the board of directors for the National American Indian Housing Council. Started out as secretary, went additional 10 years as the vice chair, and then I served two-year terms as chairwoman. I also served as the chairwoman for the Great Lakes Regional Housing Association, which is 31 tribes surrounding the Great Lakes. And I've been doing training and technical assistance for the last 5 years. So we're going to jump right into this. Please make sure you grab some of the reference materials. Every day we're touching on one of them that you will need. So they're a very good source of information for you to have. The course objectives provide that summary of NAHASDA program rules and elements, answer some common questions, walk through the grant process from formula to reporting, discuss key issues in implementing IHBG, and how do you correctly spend your funds. So today, we're doing grant management, program administration, and some of those other federal requirements and some financial management. Um, so I hope you enjoy. So a grant management process, you start out with the grant amount, decide what kind of activities you're going to do, decide who your beneficiaries are, list those activities in your IHP, make sure that grant agreement is signed, make sure you do your environmentals, figure out who your participants are, select them after you do that qualification, and then administer that program. So your grant agreement is to be signed after HUD finds your plan in compliance. The legal documents for that is 52734B. And then there's a series of other forms that you have to sign on a yearly basis. Lobbying certificates, assurance of compliance, Indian preference certification, SF 1998, and another HUD form. So it's fun. I usually always kept a copy from year to year in there, so I knew the correct way to do it. And yeah, this is what I did. I filled out this part last year. So that 52734 is the funding approval or agreement. Looks like that. And then you complete that grant agreement. You get your ELOCs access, your HUD person that you work with will say they're going to spread your funds basically, and that's when they put it in the categories where you can do that drawdown, and then you complete and submit any other documentation that HUD is going to require. For those of you that don't know, we get our money through ELOCs, or that's actually how we draw down our money. It is the electronic line of credit control system. When I started out years ago, you used to do it over the phone, and you would call and you would get this electronic voice, and we used to call it dialing for dollars. And somebody would walk into the room and, shh, I'm on the phone with, HUD's computer dialing for dollars. So now you do it right over the computer. It's much easier to query, easier to understand. The only thing is you can get locked out of locks. And you don't want to do that. So even if you're not drawing down money, if this is one of your positions that that's something that you do, get in there and query it so you don't get locked out, because it's a bugger sometimes to get back in. The other problem that a lot of times it's your tribal chairman, sometimes is your certifying officer, and we went through a long period of time where we had the same chairman in place, so it was very easy. He knew what we were asking him to do. But our chairman on our reservation are on a 2-year term. And there was a period of time where we flipped through a couple of them, and they were very, very busy getting their feet underneath them. And then they wanted them to go in and do all the stuff to get us certified for locks. So the way we found to ease it up is we took basically one of the long-standing lawyers for the tribe and taught them how to do it, and they walked whoever the chairman in place was at the time through this process, because it asks for social security numbers and things like that, and they have no idea why they're doing that when they first get into the program. So it's really important that you take those steps for certification, and once you're in there, to make sure that your passwords don't expire and things like that. So the internet version of the LOCKS voice response VRS computerized cash management disbursement system, HUD enters in your monies, your budget, into ELOCs, and then you make draws against your budget line item. There's guidance 2014-08 provides instruction for accessing ELOCs. It is much simpler to use. There's more reporting capabilities, and there's an increased ability to utilize queries. When's the last time I did a draw? How much money? So We also have to do the grant reporting on the SF 425. We used to have to do it quarterly. Now we do it yearly, unless you're an investment tribe. But I said yesterday, should you be a tribal department, it's sometimes a good idea to have them do the 425, just because it makes it easier for you at IHP and APR time to get the numbers that you need. So June 8th of 2022, that's when it became effective that we only need to submit annually from quarterly. It's a 17-page document, but that's basically when they started putting GEMS into effects, when they made that decision. So if you are an investment tribe, you still submit quarterly within 30 days of the end of each quarter, and then that annual performance report reports on the annual tasks. It's due 90 days after the end of the program year. So your SF 425 accounts for funds, all the funds you receive and disperse, quarterly for the investment tribes, 30 days after the end of the quarter. Note all disbursements and drawdowns. So they go hand in hand with your IHP and your APR. You need those. You can't basically do them without all that information. So some of that, the administrative requirements, we have a lot. Remember, we started out the first day saying we're the most heavily regulated of the programs that your tribe will offer. The types of requirements: administrative and planning cost, operating policies. We have to follow under OMB Uniform Administrative Requirements 2 CFR 200, but the tribe also has to use that same guidance. It is in charge of all the procurement. Okay, so your acquisition thresholds, things like that, your auditing, your financial expenditures, your contracting. So all things money almost. But like I said, those other documents, the regs, the statute, those are written specifically for Indian housing. The uniform administrative requirements are not. So they're a little bit harder for us to go through and find out what applies to us. We have to have cooperation agreements in place, subrecipient agreements if you have them. You have to adhere to the total development cost when you build. You have to follow the useful life requirements. And if you're an investment tribe, there's a set of procedures that you have to follow also. We'll cover some of these various administrative requirements within this module. So again, your A&P cost is dependent what you're allowed on how much you receive. So 20% if you're receiving 500,000 or more, or if 30% if you are receiving 500,000 or less. Okay. If you need it, HUD can approve a higher percentage. I haven't seen them do that though. So your overall program administrative management, the A&P expenses associated with the expenditure of non-IHBG funds on affordable housing activities, if those non-IHBG funds limit the expenditure of its funds on the A&P expenses. Now, if that was hard to comprehend, or what did she just say, call HUD if you should need to do that. Okay. Monitoring and evaluation, IHP preparation, formula challenge preparation are all acceptable, legitimate uses of your A&P funds. So the maximum A&P to report on the APR, if your cap is based on your estimated IHBG expenditures and your actual expenditures are less than what you estimated on your IHP, the APR expenditures cannot exceed the percentage used, 20 or 30% times your actual expenditures or the IHP amount, whichever is greater. So reserves, you can establish reserve accounts for the accumulation of A&P cost as follows. The guidance is at 1,239, less than or equal to 1/4 of a 5-year average of your A&P cost expended by the recipient has to be related to affordable housing, has to be stated that you're going to do that within your IHP. So your operating policies and procedures, you have to also make sure that you have policies and procedures covering your payments, eligibility, admissions, tenant selection, occupancy, finance, management policies, maintenance policies, travel policies, procurement policies and procedures. Make sure you got a good filing system for that, okay? Your procurement is definitely your A&O and your procurement are your two, and your environmental. You got to make sure. Document, and keep it. Make sure it's accessible. Acquisition and relocation, we also have to follow, and investment if you're an investment tribe. So the Uniform Guidance 2 CFR Part 200 is commonly referred to as the Uniform Guidance for Federal Awards, replaces, consolidates, and streamlines 8 federal regulations into a single guide, applies to all federal grants and to certain other types of federal awards. So these are all what they gathered up and put into 2 CFR 200. So your procurement and your finance policies, look at them, and if they have, and I always call it the A word, if you find any of these A policies or your policies referring to them, you have to redo your policy, okay? Because they're no longer, they're quoting things that we no longer follow. And I've seen them this year, okay? So it's done when your policies aren't looked at and reviewed, and you don't have people that are realized, perhaps your board of commissioners, that you're no longer following this group of policies. So make sure somebody glances at those. You'll see it in procurement, you'll see it in finance, anything with those A words, and if it's there, you got to basically redo that policy immediately, and then find out where it corresponds with 2 CFR 200. So again, it governs your management systems over your written policies, written procedures, your insurance requirements, okay? Drug-free workplace, procurement, reporting, and record keeping, your conflict of interest in the administration of contracts, audit, and your allowable and unallowable cost. So the subparts at a glance, the acronyms and definitions are at A. The general provisions are at B. The pre-federal award requirements and contents of awards are at C. The post-federal award requirements are at D. The cost principles, or your cost principles, are at E. Your audit requirements are at F, and then the appendices. Cooperation agreements and those references, you can read about those under Section 101 of NAHASDA, the statute, and within the regulations at 24 CFR 240 through 246 deal with cooperation agreements, taxation, and should you try to submit a request for waiver. There is also EWONAP program guidance at 2003-02, local cooperation agreements. So I touched on that, I think, on day 2. And there's not much budging on this because we can't pay taxes. You got to make sure that if you're not building on reservation land, that you have these agreements in place, okay? A payment in lieu of taxes is what they'll refer to it as. And, or if you if you buy something not on reservation land, you wouldn't have those executed, so you have to go and do so after the fact. So the agreement provisions, those cooperation agreement provisions, it's an agreement with your local government to ensure that those services are going to be provided to your housing participants. Housing is exempt for all real and personal property taxes. Okay. So that's another thing you need to check for. I think I've got language later on that when you do rehab or anything that you specify that they can't owe any taxes on their properties because you can't go in and help them with that. The payment in lieu of taxes may be negotiated between the recipient and the local government up to the maximum amount to compensate local government for service cost. The final rule provides a process for recipients to request a waiver of the cooperation agreement and tax exemption requirements. Recipient must show that it has pursued and exhausted all reasonable channels. Okay, so remember I told you I had a client that we went through and we worked with the tribal chairman first, then the legal staff there, and HUD does not like to, they want you to exhaust every reasonable channel. Okay, we've tried to get around that, and it's, you can't. And sometimes there's communities that don't want to deal with participants or members of the tribe or the tribe themselves. So request a waiver in writing, demonstrate good faith effort, identify all the housing units involved, provide all pertinent background information. Cooperation agreements only needed when block grant funds are spent on units owned by recipient. What services are provided? You can pay the payment in lieu of taxes, not needed when it's owned by somebody else or it's raw land. It can now be waived, but they don't like to. So you can request a waiver of the cooperation agreement and tax exemption requirements. You have to show that you have pursued and exhausted all reasonable channels. Request the waiver in writing, demonstrate your good faith effort, identify the housing units involved, provide all pertinent background information. Your total development cost is to help ensure affordability of our units. Okay, they're supposed to be moderate. HUD calculates hard construction costs, soft costs, site cost, and recipients can request a waiver variance of their TDCs. So applying the TDC limits to all residential, new construction, rehab, and acquisition activities, any type of residential structure, all affordable housing units assisted with Indian Housing Block Grant funds after October 29th of 2001, the effective date of the regulations cited above. Funds initially provided under the 37 Act that were not obligated as of October 29th, 2001. The newest TDC, and they publish them every couple of years, are 2022-16. It includes the updated schedule for the maximum amount of funds that can be used for affordable housing. Pursuant to the regulations at 1156, affordable housing developed, acquired, or assisted under your block grant program has to be of moderate design. It's subject to limitations on cost or design standards. TDC limits are published periodically and establish the maximum amount of funds from all sources. So even if you get help from the tribe, you have to stay within that limit. If you're using any NAHASDA dollars, you have to follow the TDC, okay? That an IHBG recipient may use to develop, acquire, or rehab affordable housing. The recipient must complete a comparison of the cost of developing or acquiring or rehabilitating the affordable housing with the limits provided by the TDC, may not, without prior HUD approval, exceed the TDC maximum cost of the project. So the tribe or TDHE is responsible for ensuring that the amount of funds from all sources used to construct each unit does not exceed the TDC limit. The tribe or TDHE must maintain records showing that the housing was developed in accordance with these limits and in compliance with other applicable NAHASDA requirements. Units that improperly exceed the TDC limits without the appropriate HUD approval will not be deemed to be affordable housing, and all block grant funds expended on such units will be disallowed. So determining the TDC, it's published for each tribe. It covers your tribal area. It specifies 5 dwelling sizes ranging from 1 to 5 bedrooms, can be applied to a multifamily building up to a fourplex. The construction of each dwelling unit in a duplex or fourplex must meet the TDC limit. The TDC amounts are based on moderately designed housing. HUD uses 2 nationally recognized residential construction cost indices, the M and SB, residential construction cost indices. RS means for cost estimating construction of good and sound quality structures, with 5 steps to provide the maximum TDC. In accordance with 24 CFR Part 1000, the cost of infrastructure outside the boundaries of a housing site, off-site costs such as water, sewer, roads, are excluded from the TDC. Since the published TDC only cover your tribally recognized land base, tribes that are constructing or renovating affordable housing outside of their tribally recognized land base, but within their Indian area as defined in your Indian housing plan, must request TDCs from your area Office of Native American Programs on a project-by-project basis for those locations. Your Indian area is defined in 24 CFR 1010 as the area within which a tribe or a TDHE operates affordable housing programs, or the area in which a TDHE is authorized by one or more tribes to operate affordable housing programs. Your affordable housing moderate design, as specified at 1156, affordable housing has to be of moderate design. For these purposes, moderate design is defined as housing that is of a size and with amenities consistent with unassisted housing offered for sale in your tribe's general geographic area to buyers who are at or below the area median income. The local determination of moderate design applies to all housing assisted under affordable housing activities, including development activities, acquisition, new construction, reconstruction, moderate or substantial rehab of affordable housing, and homebuyer assistance and model activities. Acquisition includes assistance to a family purchasing housing, such as down payment, closing cost, loan assistance. Units with the same number of bedrooms within a project must be comparable with respect to size, cost, and amenities. Your recipient development of standards for housing of moderate design, you must either use the TDC published by HUD or adopt written standards for your affordable housing programs that reflect the requirements specified in 24 CFR 1156. The standards have to describe the type of housing in your tribe's general geographic area. You can read about that at 24 CFR 1158B. For more detail on your required subject matter of your written policies that define moderate design as described at 1156. For each affordable housing project, you must maintain documentation substantiating the compliance with your adopted housing standards. And for purposes of this requirement, a project is 1 or more housing units is considered a project of comparable size, design, developed with assistance provided with your block grant funds. 1158 specifies that a recipient that develop standards for their affordable housing programs cannot exceed 10% of the published TDC without prior HUD approval. That notice, that 2022 notice, has guidance about IHBG Cares and ARP, because when we went into COVID, all of our estimates got blown out of the water everywhere. The price of lumber, the price of everything. So it allowed recipients to exceed the published 2019 limits by up to 20% at that time. So it's got guidance in there. Should you have done that, and if you didn't do any building during that time, you probably exceeded that. So I would go back, grab that guidance, and keep it within that file. Okay. So useful life is the period during which your low-income rental housing and your low-income homebuyer housing has to remain affordable as required by the statute at 205 A2 and 209. Okay. Requires your housing units remain affordable for the remaining useful life of the property as determined by the secretary. Other period that the secretary determines is the longest feasible period of time. So you list it in your IHP, they approve your IHP, it's deemed approved by the secretary. So that's how that takes place. Requires that useful life description in the IHP. It applies to new and rehabbed units. Does not apply to 1937 Housing Act mutual help units. Now, there were some people that continued the mutual help program after NAHASDA came around. I mean, it was designed very well for our people. And they continued to call those units mutual help. It does not apply to the mutual help units that had a subsidy attached to them that were built with 37 Housing Act. If you continued that program on and used NAHASDA funds, it would apply to those units, okay? So your affordability period, when your block grant funds or your Title VI funds are spent on a property, an investment is made for low-income families. The return on that investment is your period of continued use during which the property will be available for low-income families. The guidance 2020-02 clarifies what will be considered satisfactory to the secretary, what constitutes an acceptable binding commitment. It provides samples to document useful life for housing units assisted with block grant funds, and it replaces Program Guidance 2014-09. 2014-09 is still applicable. 2020 has things that address like FHA and other things, but there's good examples in this other one. So oftentimes when I'm dealing with useful life, I use both guidances. Okay. Your affordability period, the future use is your affordability period or useful life for that property. A useful life or affordability period has to be established for housing units that are constructed, acquired, or rehabbed using block grant or Title VI funds to ensure the property is available only to low-income families for the specified useful life of that property. So this is the 2020-02 guidance, okay? This is the one that you see most commonly used throughout Indian country. This was, I think, believed used for the home program to begin with, but this is the one that you usually see, okay? Under 5,000, 6 months, 5,001 to 15,000, 5 years. So that's why the down payment assistance we were using was only $5,000 because it kicked your affordability period for 6 months rather than 5 years. Now you can tweak it and see if they approve it some, because that's a big jump. But I'll have to keep your eyes out. I'd like to see somebody that has it approved higher amount. So for minor investments, the affordability period can be a nominal period, but NAHASDA requires some period be designated, it be secured with a binding commitment. Your governing body needs to decide if they want a single recovery amount or a prorated amount. For minor investments, if the period is less than a year, it's not necessary to record the written use restriction for purposes of complying with NAHASDA. It's a good business practice to record the use restriction for purposes of giving notice to subsequent purchasers. A binding agreement satisfactory to HUD is a written use restriction agreement developed by you as the recipient, placed on an assisted property for the period of its useful life. Program Guidance 2014-09 provides sample binding agreements. So example, this is both fee land. One is a single recovery amount, requires the full amount of block grant or Title VI assistance be refunded or returned to the tribe or TDHE should the property be sold or transferred prior to the end of the useful life or affordability period. Prorated recovery amount. The amount of the block grant or Title VI funds invested in the property may be prorated over the life of the restriction. In the event of a default, only the current prorated amount must be refunded. So for our other programs, we always used a prorated amount. So recommended tracking methods, property addresses, owner's name, amount of block grant money spent, the affordable period assigned, the date assisted, and the form of binding commitment. So we offered down payment assistance. I had a staff member married to a non-native. They got divorced. They had used the down payment assistance on property that wasn't on the reservation, sold the property when they got divorced to a non-native, non-low income person. We used the prorated amount, and the staff member was required to pay the amount of money that hadn't expired back to the housing authority. So make sure you have a spreadsheet, property address, owner's name, block grant money spent, affordability period assigned, the date assisted, and what form of a binding commitment you have. This comes from some of those documents we talked about yesterday. This is one of the spreadsheets HUD likes to use, okay? Unit number of the property, the unit address or location, what is the land status, what is the unit type, who is the current owner, what was the date of the assistance, what was the type of assistance, what was the amount of the assistance, what was the funding sources required restriction, is there a use restriction document, what's the length of the restriction, what's the start date, what's the end date. Lots of information. So your enforceable agreement, participant agreements, lien on the property, recorded, a forgivable loan agreement, or conditional grant. So depending on what type of land it is, you're going to file it with, the county, or you're going to file it with the BIA. So first poll of the day, does your housing entity have useful life policies and procedures? Yes, no, or I don't know. Yay, I didn't see any no's. Okay, I'm gonna get ready to end this thing. At least there was no no's in there. We had some I don't knows, but at least no no's, straight off no's. Okay, investments. You can invest your block grant annual grant in an amount equal to your annual formula grant amount. The maximum term is 5 years. The interest earned on funds invested greater than 5 years, you have to return to HUD. So if you are an investment tribe or you're investing anything, make sure you're paying attention to that. You don't want to have to give money back. NAHASDA allows recipients to draw down for financial investment, subject to HUD approval. Only certain types of investments are allowable. You can only invest if you have no unresolved audit findings, the tribe is self-governing, or has administrative capacity. Okay, some of your other federal requirements. Your other federal requirements cited in NAHASDA, which would apply to the recipients, most will apply to your subrecipients, contractors, and developers, also. So again, Uniform Relocation Assistance Real Property Acquisition Act of 1970, which assures fair compensation for displacement of families, okay? So sometimes I've seen people say, oh, let's buy that apartment building. Well, if the people in that apartment building are not low income or they're not native, you have to pay attention to this if you displace them by you purchasing that. Okay, that applies to more than just our, people. So you have to be careful there. It kicks in, if you're trying to rehab, sometimes like a whole project, and you have to move tenants from place to place. Should you have a fire and lose half of the, so there it kicks in at different times. I've seen where there was meth use in one place and they had to evacuate and place everybody while they did the remediation that was in the whole building because of the way the furnace filter or the furnace ran through. So whenever you have a question about that, call your HUD office. They are, like I said before, they're there to help us. Call them. If they don't know the answer, they'll find out for you. But you're a lot better off asking, Got to follow Davis-Bacon. Prevailing wages. If you have tribal prevailing wages, they can preempt Davis-Bacon if they're adopted by the tribe. We have to make sure that we're following NEPA, your environmental requirements. Have to follow, if you're in a floodplain, the Flood Disaster Protection Act, 1973, the Lead-Based Paint Poisoning Prevention Act of 1973. So if your units were built before 78, and the Uniform Administrative Act. Okay. Other laws, regulations that impact our NAHASDA program are labor laws. Okay, if you're doing any building, somebody's got to be on top of that stuff. Construction contracts over 150,000 subject to Contract Work Hours and Safety Standards Act. We have to make sure you're adhering to the Copeland Act. Those are the allowable paycheck deductions that your contractors are charging their workforce. The Fair Labor Standards Act of 1938, that they're getting minimum wage, they're getting overtime over 40 hours a week. Our money has to follow the generally accepted accounting principles, so GAAP. You have to adhere to the American Disabilities Act. So there's a lot of things that we have to learn about. Environmental reviews. The applicable requirements include the National Environmental Policy Act of 1969, which is NEPA, and the related authorities under 24 CFR 50 and 58. So those environmental determinations, in order to use our block grant funds, you have to make a determination that the activity that you are undertaking is not destructive to the environment. You have to do it before you spend any money. Okay, so that's why I was talking about the finance people sometimes not being aware of these and starting to take payroll out and things that you could owe at the time. Got to have all your environmentals done first. You do this by becoming familiar with the environmental requirements. All expenditures in NAHASDA funds have to be supported by an environmental review record, an ERR. You can read about that at 24 CFR 58.6. Tribe has two options for determining whether the activity or use of funds is environmentally sound. These are, you can ask HUD under Part 50 to do this for you, okay? I don't know of anybody that does this. HUD's still not in the office full time, and you have to still gather all the information and give it to them. Under this method, HUD is responsible to ensure that all uses of funds from block grant, your Indian Housing Block Grant, are in accordance with the NEPA, the National Environmental Policy Act, and the related requirements. Due to staffing limitations, HUD may be unable to complete your environmental review in a timely manner. To expedite the process, the tribe, the TDHE, can gather the documentation and send it to HUD, who will determine that that activity is acceptable under NEPA and the related requirements. In this case, HUD will act as your certifying officer. It's also allowable for you to pay for somebody to do this if you don't know how. I was just with the tribe up in Alaska last week. We got into the point of environmentals, and they had their own environmental workers. And I asked the tribal council, can they please do this on behalf of the tribe? You know, it's a no-brainer. If your tribe has people that are trained in this, ask if they can be responsible, whether you have to subsidize them or whatever you do this on your behalf. It takes a lot off of your director if you don't have a large staff that can help out with that. Because, we talked about all of these requirements and things that you have to follow. It doesn't matter if you have a staff of 50 or a staff of 2. We all have to follow all of these requirements, okay? And it's a lot. The smaller you are, the harder it becomes. So environmental determinations, tribe takes responsibility under Part 58. So 50, it's HUD, 58, it's the tribe. Under this method, the tribe or the TDHE prepares all your required documentation, makes the compliance decisions. Forms are usually signed by your certifying officer. In this case, your certifying officer is normally your tribal chairman. The reason is they have to be able to stand up in federal court and defend anything that they bring forward, okay, before they're submitted to HUD. The TDHE is not authorized to certify the documents. Only the tribe can exercise this right and responsibility as the responsible entity, okay? So there's environmental review categories, okay? The ones that are normally exempt, your administrative activities, your engineering, and your feasibility studies. You have categorical exclusions, not subject to 58.5, providing rental assistance, your operating cost for your program, your down payment assistance. So all these you would, be filling it out as exempt or categorical exclusion, okay? You have exclusions subject to 58.5, which is if you do utility upgrades, accessibility modifications, rehab 1 to 4 unit structures with restrictions, rehab of larger structures with restrictions. And then you have those that need that full-blown environmental assessment. All projects not exempt or categorically excluded, you have to make sure that that environmental assessment is done. Okay? Got to make sure you know about that flood insurance. This is one of the other things, my tribe in Alaska was worried about last week. Flood insurance, because you should see where they're located. I'm like, is this getting ready to flood? And they're like, no, actually the water's low and it's like almost road level, and it's like, wow. So if FEMA identifies special flood hazard area, it requires you to either participate in the National Flood Insurance Program or get private flood insurance. Now this is the reality here on the bottom line. Many reservations have not been mapped by FEMA, okay? So your lead-based paint, I had to go to training for this. they used to make the executive director or somebody within the staff go take lead-based paint training in the 90s. It was horrible. But I did it and I passed, but yeah, at least we don't have that requirement anymore, but somebody has to be on top of the lead-based paint within your program, okay? You're giving down payment assistance, you got to make sure where you're giving the down payment assistance to doesn't have lead-based paint. You're doing rehab, you're doing mod, you know. It's an easy statement saying, I don't have any lead-based paint. Everything here was built after 1978. That's fine as long as you don't give out any other type of assistance. If you start getting into the other stuff, the rehabs, the mods, TBRA, down payment assistance, lead-based paint still kicks in. So somebody within your staff has to be on top of it, okay? Include that on your standardized tenant homeowner file checklist to cover your housing stock, just your properties, okay? These were all built after this year, therefore we don't need them. But make sure you address it somehow. Otherwise, there's steps that you're supposed to be taking. Make sure that you have statements containing the age of the unit for at least those files. Okay, so real property, NAHASDA specific requirements. You can read about these at 1014. Relocation and real property acquisition, the applicable relocation and real property acquisition policies that are applicable to the NAHASDA program shall include or cover the following, found at 1014. Real property acquisition requirements subject to 49 CFR Part 24 Subpart B has to be based on an appraisal value. You can accept donated property or you can purchase property as long as it is less than fair market value. HUD requires approval if your purchase price exceeds fair market value, okay? You need to get their approval first. So that's when you're buying stuff, buying land. You're to minimize that displacement. Take all reasonable steps to minimize the displacement of persons, households, businesses, nonprofit organizations, and then temporary relocation. Covers tenant and homebuyers relocation cost and adequate advance notice. The relocation assistance for displaced person, if it's a permanent relocation, must comply with the URA and the Real Property Acquisition Act of 1970, as amended, and the implementing regulations at 49 CFR Part 24. Appeals to the recipient allows for written appeals by the people it affects to you as the recipient. The responsibility of you as the recipient, you have to certify that you're going to comply with the URA, the regulations at 49 CFR Part 24, the provisions found at the regs at 1014. The cost of the required relocation assistance is an eligible NAHASDA cost. And such assistance may also be paid with funds available to the recipient from other funding sources, if the tribe will kick in. The recipient shall maintain records in sufficient detail to demonstrate compliance with 1014. See, this is how I ended up always looking at the regs, because you read something and it sends you somewhere. And that's how you learn these programs. Pick it up, okay, what's 1014 say, So relocation and acquisition has to comply with the Relocation Act. Read about it in the regs at 1014. Make sure that your records demonstrate your compliance. Notify relocating families, individual businesses, and other affected parties. You can pay temporary relocation and displacement benefits, and the cost is an eligible project cost and can be paid from tribal, TDHE, or other funding sources. Acquisition is subject to 49 CFR Part 24 at Subpart B. Negotiating fair market value when it's a voluntary transaction, following involuntary procedures when required by the URA. So the specific requirements under NAHASDA at 156 and 158 are housing developed, acquired, or assisted under our block grant programs are subject to limitations on cost and design under 156, has to be of moderate design, defined as housing of a size with amenities consistent with unassisted housing offered for sale within the tribe's geographic area to buyers who are at or below the area median income. Applies to all housing assisted development activities, acquisition, new construction, moderate, substantial rehab of affordable housing, or homebuyer assistance and model activities. For 158, the ways in which a recipient can demonstrate meeting the moderate design requirements described at 156, use your TDCs published at 2022-16, or you can adopt written standards for your housing that reflect the requirements specified at 156, has to be moderate design, describe the type of housing, explain the basis of your standards, use similar housing within your tribe's geographic area, has to be available by the public and to HUD if they request it. You have to complete a comparison of the cost using the housing standards and the TDC for the area. Does not require HUD approval if the cost does not exceed 10% of the TDC maximum cost of the project. Your non-dwelling structures still have to support an affordable housing activity and design. Features, amenities that are reasonable, have to be reasonable. You can read about that at 1060. If funds from two different sources are used to develop the standards of the funding source with the more restrictive rules apply. You can adopt written standards for non-dwelling structures, describe the criteria to be used for cost, size, design, etc. The standards have to be able to support the reasonableness and necessity for the factors that you used in the activity. You have to document the need or the problem to be solved, how it supports an affordable housing activity as required by 1062B2. So, all goes back to your hierarchy of rules. NAHASDA and NEPA are environmentals trump all. Next, we got to follow the regulations at 1000. We have to follow the regulations at 2 CFR Part 200. And we have to follow again the trickle down from 24 CFR Part 50 and 58 of NEPA. Those guidances, program guidances, and PIH notices are next. Then you got to do your tribal policies, whatever wage ordinances, should they have those in place, housing ordinances, and then you have your program policies and your standard operating procedures. We have to also follow non-discrimination laws. The Age Discrimination Act of 1975, Section 504 of the Rehabilitation Act of 1973, option for use with the American Disabilities Act of 1990, the Indian Civil Rights Act of 1968, Title VI, and Title VIII of the Civil Rights Act of 1968. The major requirements include, but are not limited to, NEPA. Okay, 42 USC 4321 requires you to determine prior to the expenditure of any funds, activities going to have no harmful effect on the environment. Tribes can accept the responsibility for conducting that environmental review under Part 58, or they can choose HUD to complete that on their behalf under Part 50. Have to adhere to Davis-Bacon. Davis-Bacon Act and all subsections require workers to be paid no less than a determined wage for projects over $2,000. Okay, got to adhere to Davis-Bacon unless it's your crews doing the work. The tribe can adopt your own prevailing wages that supersede Davis-Bacon. Okay, there's a caveat with that though also. It does not apply to all of your activities. It only applies to the activities that you undertake with NAHASDA. Okay. The Indian Civil Rights Act, ICRA, requires the tribe and subordinate entities provide due process. The Indian Self-Determination and Education Assistance Act requires preference for Indians in employment when using federal funds under certain circumstances. Native preference. Okay, so under NAHASDA, Section 7B provides that any contract, subcontract, grant, or subgrant entered into for the benefit of Native Americans and Alaska Natives shall require, to the greatest extent feasible, preferences and opportunities for training and employment in connection with the administration of such contracts be given to Native Americans and Alaska Natives. Preference in the award of those contracts, subcontracts in connection with the administration be given to Indian organizations, Native-owned economic enterprises, as defined within Section 3 of the Indian Financing Act of 1974. Program guidance is 2013-07. So we used to have to really adhere to Section 3 by giving this Native preference. We're adhering to it. So the Native preference is, they speak to that within the NAHASDA statute itself, Section 101K. A recipient shall apply the tribal employment and contract preference laws, including regulations and tribal ordinances adopted by your Indian tribe. Now, chances are your tribe adopted them a long time ago. You know, we're going to hire Bay Mills members first, then any other Native American, or they've got this order, Bay Mills members, any other Native with a Bay Mills child, any other Native, you know, however it be. It's really helpful if you can find that resolution or whatever and put it in your depository, okay, showing that your tribe has adopted that Native preference. In the absence of tribal employment and contract preference laws, a recipient must, to the greatest extent feasible, give preference in the award of contracts, projects funded under this part to Indian organizations, Indian-owned economic enterprises in accordance with 7B of the Indian Self-Determination and Assistance Act. Again, Davis-Bacon, tribe can adopt a prevailing wage rate. You can read about that at 1016. Prevailing wage rates is determined by the Department of Labor, has to be paid to laborers and mechanics for all construction and rehab activities. Okay, when you do that, it's not a one and done though. You set that prevailing wage rate and you have to revisit it. And you have to prove that you've done that. So this is another area where we have a lot of slippage, okay? Whoever is brand new, they're filling out the IHP. I had one that did it after I told them. I said, hey, just be careful when you're going to get to this back part. Make sure that you fill this part out correctly. Didn't his thing get kicked back? He did it on his own during the weekend. I was so proud of him. And then this part got kicked back. By signing the IHP, you certify whether you will use tribally determined wages, Davis-Bacon wages, or HUD determined wages. Check only the applicable box below. You're going to use tribally determined wage rates when required for IHBG assisted construction maintenance activities. The tribe has appropriate laws and regulations in place in order for it to determine and distribute prevailing wages. You're going to use Davis-Bacon or HUD determined wages when required for block grant assisted construction and maintenance activities. You're going to use Davis-Bacon and or HUD determined wage rates when required for HUD IHBG assisted construction, except for the activities described below. So what do they click? The most of them, would they have the slippage? Check box number 1, okay? This does not mean the wage grid for the tribe that says how much the secretaries are going to get paid or anything else. This talks about what I had shown you previously, where the tribe sets a prevailing wage rate for its contractors and its maintenance activities. Okay. So it'll get kicked back if it gets caught. Sometimes it goes through, but unless you've set prevailing wages so you don't have to adhere to Davis-Bacon, don't click 1 or check 1. So the Davis-Bacon requirements with homebuyer assistance, it applies when prior agreement to use NAHASDA funds to buy a newly constructed unit. Okay, Davis-Bacon would kick in if you have that. It applies to all rental and non-maintenance activities. Does not apply when the contract is less than $2,000. Most of our contracts are over $2,000 in this day and age. Does not also apply if it's your guys doing the work. Okay. Other labor requirements, because with Davis-Bacon comes all of this. So I used to have to go out when we were building a project and go out and do these wage interviews. So I would tell them during the bid meetings and whatever, you tell them there's going to be this woman with long brown hair. She's going to go out and she's going to question your workers, what job category, what they're doing, and how much they're getting paid. And they have to tell me, or you need to tell them to tell me. And you would go out and do that. So contracts over 150,000 again are subject to the Contract Work Hours and Safety Standards Act. The Copeland Act is the allowable paycheck deductions. They don't want a contractor to pay Davis-Bacon. It maybe be more than what he's paying, and then try to get it back through all these not real paycheck deductions. Okay. You know, in some cases, Davis-Bacon, they're already meeting that wage rate. Okay. But you have to go through, identify that it's a Davis-Bacon project. They have certain steps that they have to take. They have to ask and request for those wage rates, or you do it through sam.gov. Sometimes they're paying more than that, but sometimes they're not. Fair Labor Standards Act of 1938, that's that minimum wage and overtime, that they get that overtime when they hit that 40-hour mark. So what does your tribe use for a prevailing wage rate? Davis-Bacon, we utilize tribally adopted wage rates, or I don't know. Okay, lady, what number am I on?
This is slide 99.
Okay. Lots of I don't knows. Okay. My people aren't answering the polls very good, so I'm going to end the poll. But we have lots of I don't knows. You should really find out if you're doing construction. Make sure people are paying attention to that, because you'll get in trouble if you're not. So Indian preference grants are subject to 7B, the Indian Self-Determination and Education Assistance Act. Training and employment opportunities given to Indians. You can read about that at 1050. Preference in the award of our contracts. You can read about that at 1052. Indian preference. You certify that policies and procedures, tribal code and regulations are in place, that you have preference clauses incorporated into your contracts. And there's program guidance 2013-07, which is also in your reference materials, in employment contracting in IHBG, and you acknowledge tribal regulations for Indian preference in procurement. Several documents that you should have on hand for your Indian preference. You should have an Indian preference policy. You should have an Indian preference qualification application, because your contractors have to apply for Indian preference. You should have an Indian preference determination letter, because once they apply, you either deem them, grant them the Indian preference, or you deny it. And then you have to have a complaint policy from methods of providing for Indian preference. You should have those all. Your Indian preference policy, Indian preference qualification application, 51% owned. Determination, you're qualifying them or disqualifying. And your procedure. You can read about that at 1054. What procedures apply to complaints arising out of any of the methods for providing Indian preference? Following procedures are applicable to complaints arising out of any method for providing Indian preference contained in this part, including alternate methods. Tribal policies that meet or exceed the requirements of the section shall apply. Each complaint must be in writing, signed, filed with the recipient. Complaint must be filed with the recipient no later than 20 calendar days from the date of the action or omission upon which the complaint is based. So this basically, you can adopt this language as your complaint procedure if you don't have it. Don't try shortening up the amount of times or they'll find it out of compliance, because this adheres to what the law says. Okay. I had somebody do that once. I think they shortened it to 14 and HUD said, nope, it's 20. So upon receipt of a complaint, the recipient shall promptly stamp the date and time of receipt upon the complaint, immediately acknowledge its receipt. Within 20 calendar days of receipt of the complaint, the recipient shall either meet or communicate by mail, telephone with the complainant in an effort to resolve the matter. The recipient shall make a determination on the complaint, notify the complainant in writing within 30 calendar days of the submittal of the complaint to the recipient. The decision of the recipient shall constitute final administrative action on the complaint. Recipients must satisfy either tribal preference or Indian preference with respect to our block grant activities, including the administration and the procurement in accordance with Program Guidance 2013-07. Indian preference not applicable to procurements under $5,000. Section 3, recipients satisfy the requirements when they comply with employment and preference laws adopted by your tribe. Procurement and Indian preference, Section 7B, the Indian Self-Determination and Education Assistance Act. Preference for Indian organizations and enterprises. Document if Indian preference is not feasible. Not feasible. You put it out for Indian preference and you only get one bidder that you can give the preference to. It applies on-site and off. Certify that you got policies, adopt the preferences, Program Guidance 213-07, and follow the applicability there. Okay. Financial management. What is it? Helps your housing business to run smoothly. It includes effective cost management, internal controls, record keeping, and auditing. Your benefits are long-term financial planning, accurately organizing your grant activities, effective and efficient use of your NAHASDA funds, achieve program objectives, fulfill commitments of your Indian housing plan, and demonstrate the accountability to the tribe, to HUD, and your tribal members. An overview: one size does not fit all. You tailor to the staffing and or your organizational structure. Make sure that you refer to 2 CFR 200, the post-federal awards found at 200, sections 302 through 309 for financial management systems and internal control standards. You refer to NAHASDA 1026, the administrative requirements for NAHASDA specific requirements. Your financial management system, your financial reporting, your accounting records, internal controls, your record retention, budget control, your allowable cost, source documentation, and your cash management and payments. Your financial and your fiscal management, the Office of Native American Programs Monitoring Plan, recipient. This is what they're going to look for, okay? Cash management. The purpose of the review is to assure adequate internal controls exist over your cash management. In addition, it's going to ensure that cash transactions are appropriately documented, recorded in the book of records, and reconciled to your bank records. Bank reconciliation. Is the recipient current with its bank reconciliations? Was the ending bank statement balance reconciled to the general ledger cash balance? Has all outstanding checks and deposits been reconciled to the bank statement? If applicable, has all outstanding cash deposits more than 30 days been addressed? If applicable, have all outstanding checks more than 90 days been researched and addressed? Cash receipt. The reviewer should document a cash receipt review for adequate internal controls. Note, the reviewer should review any of the areas the auditor did not review, and those where the internal control weaknesses, non-compliance, conditions, and/or question cost were disclosed by the audit report. When they come in with your monitoring, they review all your past audits since they've been there last. Review the written cash receipt procedures, observe the document the cash receipt process, analyze the segregation of duties. So they're big on this, okay? The following illustrates adequate segregation of duties. Determine if the recipient's process is adequate. Individuals in each category cannot perform functions in the other categories. Cash handlers receive cash payments, open incoming mail, restrictively endorse checks, issue duplicate receipts, and physically take deposits to the bank. Non-cash handlers record cash receipts, post to resident accounts receivable as appropriate, record program income, administrative fees, non-program income as appropriate, and prepares and sends account statements to the residents. Other staff prepare banking deposit slips using receipts, reconcile the monthly bank statements, perform surprise cash audits, program income, verify there's a system for calculating program income and non-program income, and then test the practices. And it'll show you where in the regulations that they're getting this from. So you should read that too. Randomly select a sample of bank deposits from the bank statement. Tie the cash receipts journal or general ledger to receipt books to ensure accurate recording, and receipts were issued for all funds deposited. Review the sampling methods and the general instructions. Summarize the review. Select a sample of participant payments from the cash receipt book and ensure that the funds were properly recorded and deposited. Verify check totals on the bank statements. Compare with the accounts and other source documents. Trace a sample of the checks to the tenant accounts. Expand, sample, or design additional tests as necessary. Summarize the results of the review in a work paper. Discuss the issues with the supervisor. Develop concerns. Develop findings. So that's basically what they look for. And those were in the links that we give you, I think, on day 2. If you know what they're going to look for, make sure that you've done it. It'll help. Your internal control objectives, reliability, effectiveness, efficiency, and compliance. Your areas of internal control, your control environment, management sets reasonable budgets, identifies allowable expenditures, risk assessment. Managers and staff are required to use the written policies and procedures as guidance to identify allowable and unallowable cost. Information and communication system. The department managers compare monthly budget and actual expenditures to review for accuracy, initiate corrections if needed. Control activities. Managers follow the established written procedures for authorization, approval of purchases based on the approved budget prior to the purchase. Monitoring. Accounting provides financial reports to managers for monthly review, includes the reports to the board. So you're budgeting. Plan to accomplish the goals with the funds available. Budgets are expected to be realistic estimates of sources and uses of funds. Submit as Section 5 of the IHP. So why is that budgeting important? It helps set targets, a strategy. It requires funding, identify tribal priorities, control and accountability required by the Uniform Guidance System at 302B. The financial system must provide for comparison of expenditures with budget amounts for each federal award. When the tribe or TDHE undertakes the time to budget, they're making a deliberate decision to plan for their financial goals for the short and long term. So the process, your strategic priorities, your resources, your activities, your eligibility, and your capacity. Follow the procurement policy required by 200, 318 through 326 and the conflict of interest. You have several different procurement methods, micro purchasing, small purchasing, sealed bidding, competitive proposals, and non-competitive. Good idea if you do any type of building or you're within that department that you take a good procurement course. They're bare. I was working on writing one the last 2 days. Your procurement requirements, written policies and procedures regarding competition, methods of procurement to be followed. Get a good file system. That's huge, okay? Contract cost and price, awarding agency review, bonding, provide acceptable methods when inconsistencies exist, contract provisions, conflict of interest, lots of stuff in there. And there's your procurement claw that we use, micro purchasing, no quotations, equitable distribution. You're not supposed to spend all your money with just one vendor. Small purchasing, sealed bidding, your competitive proposals with evaluation methods, and sole sourcing, which HUD does not like, okay? You don't do that unless it's an extreme emergency or you can only get one person to bid. And the thing with that is they'll ask you to put it out for bid. I had to put something out for bid 3 times one time before they would allow me to sole source. So that is definitely do not pass go. They don't like that. So anybody have any questions for me? If not, make sure that you come back. We're almost done and fill out her forms that she needs.
It looks like somebody is typing a question into the chat, Cheryl. Ooh, maybe not. They stopped typing. All right, folks. Feel free, if you do have a question, to send it into the chat. I'm going to go ahead and start closing out. Thank you for another fantastic day, Cheryl. 4 out of 5. We are almost done, y'all. I hope everybody comes back for tomorrow's training. I'm going to go ahead and launch today's webinar feedback survey. As always, it just takes a moment for you to go through, and it helps us to know what's working well, what we can improve upon, and that way we can keep our attendees happy, because we appreciate y'all. The next webinar is going to be tomorrow. That will be the conclusion of the NAHASDA Essentials training, day 5. So we hope y'all will join us for that as well. Feel free to access this as well as any of our other recorded webinars online. They're on our website, nativelearningcenter.com. There is a Cathedra webinars tab with a recorded webinars section. You can access any of our recordings from the past 2 years. Feel free to view those, share them with your friends, share them with your colleagues. Please also check out our upcoming events posted to our various social media. We're on Facebook, Instagram, Twitter, LinkedIn. We have our own podcast that's in-house produced. It's the Hopathanga Native American podcast. We discuss more focused topics within tribal housing and self-determination. You can find that on Simplecast, Google Podcasts, Spotify, Apple Podcasts. And if you're like me and you prefer to watch the videos of the interviews, then you can catch those on our YouTube channel as well. All right, y'all. We have some love in the chat from Sabrina. Cheryl, she's saying thank you, but it does not look like we have any questions at present. So I'm going to wish everybody a fantastic rest of your day. Cheryl, I'll talk to you tomorrow. Thank you again for another incredible webinar.
Thank you, guys.
Hope everybody comes back for day 5. And remember, if you missed any of the days along the way, those links are right there on the web links, as well as a little further up in the chat. If you just scroll up to the top, day 1, day 2, and day 3 are all there for you. All right, folks, have a great rest of the day.